You're listening to the Good Question Podcast with Richard Jacobs. Our goal is to make each of our guests exclaim, that's a good question. I don't know the answer. Because when that happens, it means you, the listener, may be inspired to learn more beyond the interview and to ask great questions yourself that lead to new insights. In this podcast, we cover historical and current anthropology, comparative religion, and history. Welcome, and let's get started.
Hello, this is Richard Jacobs with the Good Question Podcast. This one I think will be universal. It'll go across all three. My guest is Kyle Smith. He's a CPA and Partner at Strata Cloud Accountants. We're going to talk about KPIs, key performance indicators for law firms that wish to grow. So welcome, Kyle.
Hey, Rich. Nice to be here.
Yeah, tell me a bit about your background. I don't know if you're an attorney as well or just a CPA. It's not just a CPA, but tell me a bit about yourself. We'll get into Strata.
Sure. So, I actually came to working with firms later in my career. I kind of grew up in the restaurant and hospitality industry. So my dad worked for Brinker, which owns Chili's, and started a chain of restaurants here in Austin, Texas, where I'm located, and went to work with him right out of school a while back now. And I was, business background, was a finance major, not yet a CPA at the time, but fell in love with accounting and fell in love with the finance side and really, with the idea of helping the business save money and make the most money it can, and kind of cut my teeth in that industry. After working with my dad, I moved to controller for other bars and restaurant group here in town in Austin, and then worked as a finance director for a brewery as well. And realized when I was at the brewery that the work I was doing, I could help more people. I thought, I could have more utility and help more people if I kind of learned some new industry, learned some new skills. So I went to work for a company called Scale Factor in Austin that was making accounting software, and was head of their implementation team. And we were onboarding 30 clients a week at the height of working with them. So I saw many law firms come through and worked with many and kind of had a crash course, learned what worked, where their skill set lied, where we could be valuable on the financial side and accounting side.
When you say law firms, are these corporate law firms, like what practice areas and what size, like how many partners or attorneys in the firms?
Yeah, usually smaller firms. So we'd see personal injury, and also we'd see like IP patent law type smaller firms with maybe 3 or 4 partners, and the tools that they were using, because I think to your point, kind of the size is very telling of what software tools they're using, especially on the accounting and financial side. But it was firms on that smaller side. So looking to us as an outsourced accounting solution and financial solution. And working with Scale Factor, I found that, we have the accounting solution in place, but there wasn't a lot of strategic guidance. And even on the accounting nuts and bolts, there wasn't a lot of strategic guidance that we give because of how fast we were moving with what I was doing on the implementation team. So I was really interested in kind of slowing down, learning more there, and seeing if I could help people on that side. Because, nuts and bolts are super critical. Accounting-wise, you have to have your numbers, otherwise you can't make decisions. So even starting there, I found that, there was a lot more that I could do and learn. And so 2 partners and I, working at Scale Factor, we split off, really focusing on that strategic thought leadership on the accounting and financial side. And we started Strata Cloud Accountants 3 years ago, and have worked with some great companies, not all law firms, but worked with some great law firms and work with some great law firms now.
I work with, a bunch of law firms that are small, 1 to 3 partners. I'm curious, we're not asking for any particular one, but what are some statistics, profit margins on average per practice area? Do you have any, non-attorney specific, but more industry-wide data? I think listeners would be very curious about, to hear what is average margin, et cetera, and what are some of these KPIs for firms?
Yeah, so it really varies. If we're working with a IP firm, they might have a setup where basically, partners are splitting the bottom line, and then they're contractor based for all of the projects. So then you can get some wide range, because you might have a month where you have heavy partner work that are billing a higher rate, and you're going to show more profit. But at the same time, you might have and we look at this, if you're projecting out and saying, hey, I only have so much time as a partner, we're really going to rely on contractor labor in some case, and really see if we can expand, the margin's going to get cut. The bottom line is going to get cut in terms of a percentage of revenue, but the dollar amount could be much higher. So that analysis, is important, that you look at not just, hey, what's the actual margin as a percentage, but dollars make a big difference too. So you might be willing to cut your bottom line margin if you're in a firm like I'm describing, where your partner taking a percentage of the bottom line net income.
What about on a very simple level? Let's say a personal injury lawyer and they had a case. What's like the average margin on a case? I don't know if you go to that granular level sometimes to look, but, let's say someone's doing it in flat rate or contingency, they're not billing hourly. Do you know some of the margins on individual case types?
I'd say it's a wide range. So, I specifically work with IP more, so I wouldn't want to throw something out I wouldn't be 100% sure on. But I will say, if you're projecting out and you're a personal injury lawyer, it can really depend on average case size too. I know margins are usually the same, but you could have some big outliers that could affect things when you're talking about margin too. If you have an average case size of maybe 18 grand, but then you've got 3 or 4 cases that are 150 grand, and maybe they all hit in 1 year, and then you have 2 or 3 years where you don't have any cases that big, it could definitely affect what you're projecting.
But in the other practice areas too, let's say I'm a criminal defense lawyer and I have a DUI case, and I look and I say, all right, it's going to take this much work. I'm going to charge them $5,000 for it. How do I know I'm pricing it so I'm still going to make margin? What are some guardrails that attorneys could and should have? How do they even know what their KPIs are and what they should be? And, the example I'm giving is probably very simplistic, but, depending on the area of law, and again, depending on how much they charge or how much they expect to get from the case, why do a case if you're going to break even or lose money? So that's why I wanted to get some sense of the range of margin.
Yeah, so you should definitely be shooting for at least 50% margin on a case like that. And then it really comes down to what's the structure of your firm beneath that. So obviously that's your variable cost because everything's set on an hourly basis. But if you can make 50% on a case like that, speaking generally, and then it really still comes down to what's your overhead below that to see what you'd actually be making.
So how do you work with law firms to identify what KPIs they should look at? What are some examples?
Yeah. So usually it's, taking the first step. So like I said, we work on the nuts and bolts side to make sure that first we're getting accurate numbers with whatever accounting system they're using. And then from there, we're looking at the basic KPIs and where they're running and where they can improve. So they might have a goal saying, we want to hit this amount of gross margin this year. So then we can run obviously like a build time versus what they're charging at each tier for their partners and their contractor attorneys and say, okay, if it's a dollar value, you're going to, at this certain rate, you're going to need to close this many cases. Otherwise, you're going to need to raise rates by this much. And then it would be a matter of determining, do you think how that's going to affect business? If you think you can raise rates and lose anything in terms of client velocity or client count, then that means you'd be priced too low and you need to move it up. So that big one that we see is that if you're not looking consistently at where your rates are, and if there's room, you'd be missing a lot of dollars because all of that effectively, you might lose some people, but effectively, if you can raise and not lose, that's money that's all flowing down to the line and immediately improving your margin without any incremental cost.
Yeah, that makes sense. Yeah, you always want to keep your prices adjusted. And it's like a landlord, you don't want to have a tenant, you feel bad for them, you don't raise the rate for years, and now they're paying substandard. So it sounds like same thing with law.
Yeah, I mean, it's painful to do. That's the thing that I certainly understand. It's painful to look at that. And it's not about gouging, it's about being fair. And if you're not addressing that, though, that's one of the fastest and easiest ways, if you are underpriced, to correct, because there's no corresponding expense that goes with it.
Speaking of pricing, inflation, at least to me, seems to really have hit this year. I feel it all of a sudden everywhere. Prices have gone up like crazy. For the legal profession, have you seen that their margins have eroded, or are they okay?
The margin percentage has eroded. And I think that's partly because what I just talked about, it's hard to keep up with inflation. You can't, adjust your price every 2 weeks or every month necessarily, or even every 3 months. So margins have eroded. In terms of dollars, then it comes down to how hard they're kind of hustling on the new client side. So that's another KPI that we look at is new client count, because there's only so many levers you can pull. And to your point, if prices are going up, you either keep pace with your prices. And if you can't do that, you need to close more cases or close more quickly and increase the velocity. But yes, I'd say margin percentage is eroded. And in a case of a client that I work with, they've done a good job of keeping their new client count growing. So on the terms of the bottom line dollar that they can distribute, they've been able to keep it consistent with last year, but then that's taking more work on the front end to get those new clients.
All right. So again, what are some of the KPIs? You get a new firm, they come on board. I guess, you sit down the partners and, what do you go over? How do you establish what KPIs should and could be?
Yeah, a lot of it is starting where they are and then trying to kind of make the incremental changes to get to a spot where their goal is. So sometimes it might be that client wants to, as a partner, they want to work less. So we'll look at what the margin is if they bring in contractors and what they expect that contractor rate to be. And we can do an analysis and say, okay, if you want to move back to this many hours, you're either going to take a hit in your profit, or if you bring in a contractor, here's the amount of new business that you're going to do to make it up. So that would be looking at gross profit percentage and net income. But a huge one that we emphasize, and it really doesn't matter the type of firm, is looking at net income versus net cash flow. So that's one of the hugest ones that we look at and say is is that growing and why? So they might be getting more profitable, but the gap between their net income number and their net cash flow could be growing. So that's once we've gotten the nuts and bolts established that we're getting accurate numbers, that's the first one that I look at is what's their receivables look like? Are they growing month to month? Are they growing in line with their sales? Or are they getting bigger with a consistent amount of sales? And then why that is. So time to close is a huge KPI that we look at, and change in receivables, for the biggest reason being income is not cash. So that's a big one that we focus on, is making sure that the cash collection cycle is consistent. And in our firm, we have the strategic side. Also, we work with a firm now where we have a person that's on our team, but that basically is working on their team to manage receivables and manage the receivable cycle and make sure that they're getting paid on time, or at least as fast as they can.
Yeah, for receivables, it depends on the area. Like bankruptcy is very, very high volume, low dollar. Everyone's probably everyone by de facto is on a payment plan. Certain areas of law seem to be more prone to payment plans. And attorneys, from my experience, they don't like to deal with, no one likes to deal with receivables, but they also have a problem too. They're representing the person. If the person is not paying, they may want to withdraw from the case, but can't. They may be at a point in the case where the news is not yet good, for the client. There's no determination, and the client's just stressed out, and they're paying and paying and paying and maybe not getting results, they feel like. So how do you deal with the psychology of receivables? How do you get law firms to go after their receivables in an ethical way so they can get paid?
Yeah, so there's not an easy answer to that in my experience, but I would say consistency is key. So there might not be much in the situation that you just gave, except to check in consistently, and with all customers checking in consistently, because there could be different reasons why they're not paying. They might be prioritizing other things. So if you can consistently say, hey, here's the balance, they might be able to prioritize your payment over somebody else's, or they might not have known, or they might not have said anything and have been thinking that there was something unfair with the amount that they were charged. But if you gently bring that up consistently, you can usually bring those things to the surface earlier, and overall get paid earlier and keep the receivables manageable. So it's not knocking on doors with a baseball bat or something like that, but it's gently saying here's what it is, and then let's work on something that might be fair if there's a discrepancy from what you think and what I think.
Okay. So beyond receivables, what other KPIs are majorly important? You said cash flow, not income. How often, do your firms review cash flow? Do you do it for them? Is it weekly, monthly, quarterly?
Yeah. So usually we're reviewing cash flow on a monthly basis, but a lot of the times I could see where you'd need that more potentially. So no firms currently that we work with, but with other companies, we do a 13-week cash flow week to week. So that could definitely be very beneficial if you're tighter on cash in the beginning and you've got specific cash goals. Looking at it a weekly basis on actuals, what's coming in and what's coming out, is really beneficial. Otherwise, we're looking at estate cash flows on a monthly basis, and we're looking for those telltale signs of difference, big variances in, like I said, receivables or whatever it might be on that side that could be causing an issue.
Is there any seasonality to the firms that you work with? Or, are there any things that have recently changed in the past 6 months or a year that you have to address that wasn't important before?
Obviously, much higher variability with the personal injury firms that we're working with compared to, like IP firms, but not a ton of seasonality. They're really dependent on the nature of the business. So if a firm of ours has 2 or 3 massive clients, one of those clients goes through a acquisition that kind of ramps things up on the existing receivable for that account and who they're dealing with, and could affect the projections. So that's where, we have to communicate, and usually communicating at least weekly in that case to try to project out if we're doing a weekly cash flow. But I would say it's more dependent on their clients and not an overall seasonality for the big cash changes.
Okay. Do you do tax planning with the clients, or is it, more like the end of the year, okay, we get the taxes done for you? Are firms amenable to planning? And if so, what does that look like?
Yes. So I'd say a lot of our firms are amenable to it for sure. We are operational specialists, so we focus on getting the right people in place. So if they need an accounting team, we provide that to make sure that we're getting those nuts and bolts numbers, like I mentioned, and then obviously on the strategic side as well. And then we're quarterbacking with tax strategy partners. So we have partners that we work with, but we don't provide any tax strategy in-house directly, but we work with, if they have somebody, we'll be working with them. So usually we're definitely people that bring a smile to our tax CPA's face, because we're coming in and making sure that at the end of the year, they're not having to do a bunch of work and chat with the partners and rack up billing time for a tax CPA firm. Keeping it very streamlined and smooth for them is our goal.
What other challenges do you see in the law firms face? Either because, the nature of lawyers themselves, you see that it makes it more difficult to deal with taxes? Like, does their mindset, do they have a planning mindset or more of a reactive mindset? Like, what is it like personality wise when you deal with the firms? Like, what's easy and what's hard?
Say the reactive mindset is probably the biggest challenge, but that's partly on our side in terms of, in general, the accounting side needs to be up to date. So that's one of the biggest things we do is if they're behind, for instance, then they might get behind on like a quarterly estimate or be way off. And then that causes a bunch of friction for them because they have to pay more than they expected. So that's the biggest one but that's what they're used to because maybe they had somebody in-house that was consistently behind. And so they were just used to reacting because they had other things to do. So I think that's the big one is to move from reactive to proactive. And it's not sexy, but it starts with the nuts and bolts and staying ahead of getting accurate as quickly as possible, because then we can get an accurate estimate and there's not a big surprise for those partners when tax time comes around.
Okay. Makes sense. Do you work nationally with firms everywhere, or is it just in Texas or just in Austin? Like, where is your reach?
Right now we are in Texas, but we can work with firms nationally. We had a firm that was based out of state that moved into Texas. And so now everyone that we're working with is based in Texas, but it doesn't have to be that way. It's just a coincidence of, what we're doing right now.
Well, what do you do if you have a law firm, let's say in El Paso, and they get business from like Las Cruces, New Mexico, right across the border? Or I know like Kansas City, you get Kansas City, Missouri, Kansas City, Kansas, New Jersey, Pennsylvania, et cetera. Some law firms are on the border and they get a lot of their business, let's say from people crossing a bridge from one state to another, or, again, just driving from one state to another. What do you do with those kind of clients? Do you partner with firms that are in adjacent states, or do you not need to?
That hasn't come up yet. And I would say I would be, for what we do, I'd be probably doing the latter. And I would make sure that we would be able to be successful in an engagement like that. So that's the biggest thing for me and for us is that we're sure we can help the client. And if we can, or we foresee an issue there, then maybe that wouldn't be a fit. But I would say working with an adjacent firm would have to be the way to go, most likely in that case, just to make sure that we could be successful. Because if we can't, that's not something that I'd be interested in doing, because we're always one to help people and not be a hindrance.
Yeah, I mean, just speculating. But it'd be interesting if, again, a firm was in, let's say, Kansas City, and you did a tax analysis. Let's say the firm's large enough to take advantage of, I don't know, 20, 30,000 a year in savings. Maybe they move from one side of the river to the other, and now they're in another state. But I know this is going way beyond what you normally do, but just came to mind. So
yeah, no,
tax perspective.
Yeah, absolutely. And that's, problems that I would love to come up on, because it's good to try to tackle those challenges. And it wasn't something I considered yet because we haven't come upon it. So I definitely appreciate you bringing it up anyways. It's something I could look into.
Okay. Are there any deductions that are common or available specifically to law firms, or, certain professionals that law firms are not aware of?
I'd have to defer on that question to our tax expert team. I would say beyond the normal exemptions, I couldn't talk incredibly. I'm not an incredible expert on that topic.
Okay. All right, I gotcha. How much of an improvement have you seen when law firms come to you and kind of get everything in order, change their mindset to be more cash flow focused instead of just revenue, and, keeping on top of things, let's say at least on a quarterly basis? What have you seen happen to the firms you work with?
Well, absolutely. So one, on just the personnel side, in terms of direct cost savings, were incredibly valuable. So, as an example, worked with a firm that had one person doing the accounting, one person doing the billing AR side, and then one person kind of consulting with the accounting software, kind of working on a contract basis. We've come in and replaced that with one person, and me in that case overseeing as part of one package. So for them, on a price perspective, that's a ton of value because they know what they're getting from month to month with the way we price on a set structure, and they're replacing 3 people with effectively 1, which is incredibly valuable just on a cost perspective. But then otherwise, in that case, we're also doing a better job of keeping the numbers accurate because we're owning all pieces of it and up to date. So they can foresee, hey, we had in the prior year, for instance, they were behind maybe 6 months on their accounting, but we came in and we got them so they're up to date. So they can say, hey, the first 2 months are much lower than we projected, but we've got capacity with the contractors that we have. So we have options now. We need to go to work on biz development, or we need to cut down on the contractors, where before they might have sat there for 6 months with extra capacity and lost money that would have compounded over those 6 months. So that's one of the biggest ways where we can show value, is obviously doing a good job on the nuts and bolts side and can save there. And then moving into that proactive mindset, like you said, so that the decisions they're making, they can make them closer to real time, and they're not going to be leaving money on the table from 1 month to the next, especially if there's a lag in that accounting data to make decisions off of.
Okay, very good. Well, Kyle, how do firms that are listening get in touch with your firm? what should they Google or where should they go?
Sure. So our website is stratacloudaccountants.com. And we also have a landing page specifically for listeners today. And I'll give it to you to provide it in the show notes, but it has a KPI, downloadable KPI sheet where you can start tracking if you're a firm owner and you're not tracking that now. And also instructions on how to do that, because we really believe in going from 0 to 1 is the hardest part, making that first step and not getting overwhelmed with the numbers. So would be excited if listeners check that out. But once again, our website is stratacloudaccountants.com.
Okay, and Strata is Strata. Is that right?
Yes.
Okay, very good. Well, Kyle, thank you so much for coming on the podcast. I appreciate it.
Absolutely, Rich. It was a pleasure.
Thank you for listening to the Good Question Podcast. Please email support@thegoodquestionpodcast.com if you have any referrals to great guests for us to interview. Visit thegoodquestionpodcast.com to hear more interviews. And please help us spread the word by rating and reviewing us on Apple Podcasts, iTunes, Spotify, YouTube, or wherever you listen to this podcast.